Tesla's car business is struggling. Revenues were down 20% year over year in its automotive segment. And as the automotive segment continues to struggle, which I do forecast will be the case at least throughout this year, perhaps throughout next year as well, its other parts of the business are becoming more important. That's what I'll talk about in this video. Some discussion on Optimus robots and the energy business as the company struggles with electric vehicles. It'll need to emphasize these other segments even more than they've already been doing in recent years.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Tesla says that we expect to have thousands of Optimus robots working in Tesla factories by the end of this year and doing this even more so. And the CEO said that I think I feel confident in getting to 1 million units per year in less than 5 years and maybe 4 years. Now, I think this is a highly optimistic forecast, and Elon Musk is a permanent optimist when it comes to Tesla's business and Tesla's prospects. If I could place money on the over or under in this forecast of Tesla producing 1 million robots per year in less than 5 years, I would definitely take the wager that it will not be doing this. I would say it would not be doing anywhere near this. I would say that it wouldn't even be doing 500,000 units per year in 5 years. But I think this comment by Elon Musk is not geared towards investors like myself. This is geared more towards Tesla employees and Tesla enthusiasts to get them working and get them excited towards this goal. And even if they don't get to 1 million units, certainly setting a target so high in the sky gets current employees working harder, working that much faster to try and get progress in this technology faster, right? So this is more of a management tactic rather than an accurate forecast. Because if you look back on the accuracy of Elon Musk's forecasts, they have a very low percentage accuracy. So as an investor, you have to understand what this comment is geared towards and not get into this excitement and think that this is actually going to happen. But this is more so just to get people excited. And that excitement certainly benefits Tesla without really any downside, right? Elon Musk has made these kinds of forecasts for a decade now. And I think 90% of them have been inaccurate. They've been over promises and under deliveries. Regardless of that, they've been positive for Tesla because they've gotten people to work harder at the factories. They've gotten people to work harder in the engineering units, and they've made great progress on a number of fronts. So these forecasts, inaccurate as they might be, have been beneficial to Tesla. It's been a successful management strategy, both in terms of improving productivity at the company and also keeping share prices elevated because there are certain investors who take these comments literally and actually expect the company to deliver these results because they haven't studied the history of Tesla, or they've just felt that it's better to just believe and go along with it because the share price has moved higher so much over the past decade. So I just want to caution investors to understand what these types of forecasts are geared to produce from Tesla's management team. The company also said that the Megapack is enabling utility companies to output far more total energy than would otherwise be the case. And this is becoming even more important now because demand is soaring from utility companies because of the rising effectiveness of artificial intelligence. These data centers that are being built optimized for AI, which companies like Amazon, Alphabet, and Microsoft and Meta platforms will be spending roughly $200 billion building in 2025, these require more energy than a traditional data center. And so power companies and these data center companies are hungry for more power, and Tesla's Megapack delivers that power. So I thought this explanation was really interesting here, and it was actually giving information about the company and not just making these pie in the sky forecasts. The company said that if a power plant could operate at peak power for all 24 hours, as opposed to being at half power, sometimes a quarter of a power, then you could double the energy output of existing power plants, which is very important because there's great demand for power. There is more demand for power than there is supply right now. Many of these data centers that are optimized for AI, many of the plans are paused or fail to materialize because there isn't a sufficient power supply to support those data centers. So we have this insatiable demand for power right now, and I believe that will persist because these data centers optimized for AI continue to be built, and that's not going to end anytime in the next 3 or 5 years. So, in order to do that, you need to buffer the energy so you can charge up the battery pack at night when it's not being used as much, and then discharge it during the grid during the day. So, you build up the power supply at nighttime and store it, and then during the daytime, when there's greater demand, you can unleash that demand. And so, this is a massive unlock on total energy output on a grid over the course of the year. And utility companies are beginning to realize this and are buying their Megapacks at scale. And so this part of Tesla's business now has great prospects because of the last 4 quarters and 8 quarters, where companies, like I mentioned, the hyperscalers, are spending aggressively to build data centers. And what I've heard from them is one of the reasons why they haven't been able to build even faster is because there's a lack of power. There's a lack of supply of power. And so that's constraining their ability to build these out. So as Tesla's car business continues to struggle, which I expect will be the case for at least the rest of this year, perhaps the rest of next year, the energy business will likely take a greater, more meaningful role because the energy business is growing, the car business is declining, and so it's becoming a larger percentage of the business because of those double forces that are working in favor of the energy business. And as an investor, I would prefer to invest in a company that's delivering growth in the energy segment rather than the electric vehicle segment, because we've seen from many, many car companies that the margins for car companies are dismal. There's very few car companies in the world that generate even double-digit operating profit margins. It's not a lucrative industry. So you would prefer to get a business with lower automotive revenues and greater energy revenue and greater services revenue, which is happening for Tesla, unfortunately, because the automotive business, which used to be over 80% of its business, is declining quickly at an accelerating rate, while the energy business and the services business continues to grow. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.